But let's move on to the top 5 things to watch next week, Kev. And so what's number 5, Kev?
So we have the U.S. ISM manufacturing number.
Right.
So what do you think, Patrick?
Well, you know what? Clean a shirt in a dirty. What is that analogy?
Really?
Oh no. Okay. Listen. What I'm getting at is, look, the U.S. Manufacturing has been under 50, but it's being dragged down because the rest of the world's manufacturing is below 50. Right? Like, you can't have a manufacturing expansion in the U.S. when the rest of the world is in a manufacturing recession.
Okay, so Patrick, it's actually, I just looked it up. This is the Chicago PMI, right? Is that the one we're talking about?
No, manufacturing.
Oh, sorry,
PMI.
there it is. There it is, the manufacturing PMI. It is supposed to come out on the 1st of October, and it's supposed to be 50.1 is the survey. I'm going to go out on a limb. I'm saying we're getting a sub 50 number.
Sub 50.
I think we're getting it.
I just can't imagine, with the U.S. dollar being as strong as it is, that somehow U.S. manufacturing would be flourishing in a period where global manufacturing PMIs are all, majority of them are, or many of them are well below 50. Yeah. It's just, the U.S. simply can't be isolated to that degree, and therefore I agree with you. It's going below. Okay. Bitcoin.
Oh.
All right. And so,
okay.
You know what?
So we got to say something, Patrick, because we were talking about this earlier. Pull up the chart. Because I do not practice the dark art like
No,
you
do not.
I do not. But I must admit, I looked at this, and when I saw the formation, even I could see a descending triangle that kept bumping along the bottom. There's no such thing as a triple bottom. There it is in practice.
Okay.
Right? And I don't know why anyone, and do you know who actually tweeted that out? I think Peter Brandt, that technician.
Yeah.
He's a lot smarter. He's the guy who says there's lots of captains of the seas whose boats are at the bottom of the ocean who also didn't believe in charts. Great line. I really like it. But anyways, he was the one who said, I call it like I see it. It looks bearish to me. And I agree with them.
Yep.
And look at that, and we talked about that even before it broke. We said, I don't see what everyone else sees. It doesn't look bullish. It looks bearish.
I'll agree with that. I mean, I had a bias. I said I wanted to have confirmation of a break because I wasn't going to trade it to my thing. But to me, this is incredibly distributive price action. There is no sign of heavy accumulation and for the fact that it's spent such a long time consolidating. If the bulls had momentum, then one of these breakouts would have stuck during the summer. The fact that we spent June, July, August, September all just trading sideways down, lower lows, lower highs, lower highs, lower highs. That's just active distribution. I agree with Peter and I agree with you. That's not bullish price action. And if the bulls listen, maybe Bitcoin will become bullish, but the chart better start looking much better than that if they're going to make a run on it, because that looks like shit.
Patrick, you had just said there's some terrible things that we're going to be labeled no coiners, and they're going to hate us. We're going to get lost.
No, yeah, I'm sorry. If the trend turns up, I'll call it the way it is. If it looks like Bitcoin is going to 20,000, I see no shame in saying it's going higher when the trend is very distinctly pointing that way. All we were identifying was that the price action did not correspond with everyone's opinions.
I will not do that, and I will contend that it's just on its way to fundamental value. I see it's trading about $82.25. We only have $8,200 more to go.
All right.
Just kidding.
You're not. Someone is going to Twitter shame you.
Yeah. Send all your hate mail to Patrick at bigpicturetrade.com.
Oh, no, don't even.
Number 3. Let's go. Fang. Okay, I chose this one. I'm going to talk about this because I actually think this is important.
All right.
And what I wanted to say was we have FANG, which has kind of led this market. And pull up all your charts here, Patrick. Let's get them up so everyone can see them.
Yeah. So let's
We're going to
go
go
in
through
order.
some of these names.
Let's go alphabetically in order. So
Okay,
F is for Facebook.
Right.
So
I want to say what I'm looking for. I am looking. There are some that have rolled over, and we see these FANGs, which have been the leaders that have rolled over. My question about what to watch next week is, do the ones that haven't rolled over join those ones that have already kind of given up the ghost? And that's what I'm watching for. So let's go through them and identify which ones have rolled over, which ones haven't. We're waiting for. Facebook.
Well, Facebook peaked out in June, July.
Looks like shit.
Wasn't able to in the August rally. Didn't even do a 50% retrace of its prior sell-off, and has rolled over and is pretty much breaking to below its July lows. This is very negative price action.
Right.
Facebook is one of the ones in downtrend. So Amazon, the next one, looks exactly the same as Facebook. Peaked out in June, July. The rally was absolutely pathetic through August, rolled over and is already breaking its July, August lows. So the two charts actually are pretty rough. Now Apple is holding up.
Right.
Apple
but it's
not
truly
only
not an original FANG, by the way. But anyways, we'll put it in there. It is holding up. It is one of the generals that are still sticking up there. Okay, let's go on. Netflix.
No, Google. Netflix and then Google. Okay, yes.
Yeah, Patrick's not good with the words, so we have to.
No, and I certainly don't know how to spell. And so
Netflix looks terrible. It's awful. It's a terrible looking.
That's
chart.
That's been one of my great short sells. We nailed it at 330 with the members of Big Picture Trading, and we caught a good chunk of that move. But it's been one of the bearish ones. It certainly looks like shit. So I had a little bit of a support here. This kind of 240, 250. So it could bounce, but it's been an awful chart, and it's going to take a lot of work to repair this chart technically to get bullish. But other than Apple, Google has been one of the good charts as well.
Right.
I mean, it's not far from its 1,300 high from April.
It definitely has a trend that's up, and we can put in like a little bit. Well, it's not really technically correct. The orthodox fangers won't be appreciate this, but let's put Microsoft in there because it's almost a FANG.
Yeah,
it's also looking good. So
you know what? It is. What a technician will identify, I don't even need to have it on here, is there's going to be a divergence in momentum because even though it's holding up along the highs, it has stopped appreciating. And so, like, if you think about it, it's at the same price it was in June as it was in July as it was in August, and often these can develop into topping formations as well. So it has done nothing wrong, but there's definitely divergences that would be very toppy here. Which would be concerning for a potential trend reversal, which I'm not trying to forecast, but it is not.
So watch for that. Watch for Apple, Microsoft, and Google to roll over because then they'll join the other ones, and it'll be bad news for.
Well, will that play into that whole? Different sector rotation and the different classes like value versus momentum and all these different things. Like, are the FANGs going to get sold but yet some value sectors and financials might rally in that period? I mean, is that possible or
sure? That's what's happening, and that's what's going to continue to happen.
So what sectors do you think will continue to do well other than home builders? Because I know that's the first thing that's going to spew from your mouth.
Well, I think on a relative basis, financials will do well, and I think there'll be some other, value names like that, like of that kind of ilk. Who knows? Maybe even oil will do well in a real sell-off.
I'd like to. My wallet would like if oil was doing well.
Yeah.
But anyway.
Okay.
So
number 2, jobs
numbers. Are we finally going to see them uptick?
I don't know. I'll tell you.
They're lagging, right? So shit's going to already be hitting the fan by the time they start upticking. There's a lag there.
I don't know. I don't have a view. I agree with you that they are lagging. They're also volatile. Like, who knows? They can't get much better, though. That's one thing you think. Like, when you have unemployment at this low a number, just like, it's tough to make more jobs and stuff. So it feels to me like it only can disappoint. The real question is, if it does disappoint, like, do bonds go bid or does the stock market just go offered? I'm not sure. Hopefully the curve steepens. That's all I hope. Okay, number 1. Let's go.
Number 1.
Here we go.
Yeah.
So I'm
And
gonna.
so, Kev,
This was my
you
choice,
take this.
right?
Yeah,
Yeah.
you take this.
Because I tweeted out today when news leaked from Bloomberg News that the the Trump administration was looking at basically curtailing the Americans' investors' ability to invest in China. And I said that this trade war has now become a financial war. And I contend that the market is underappreciating this, what this means. I really do. I think up until now, we've been doing most of our stuff. Most of the kind of disputes between the two nations have been tariffs and of that nature. Now, all of a sudden, we have a situation where one nation is actually trying to use their financial clout to, influence the trade agreements. Now, some people said to me it's always been a financial war. And yeah, I hear you. I understand that argument. But I contend that it is now an overt financial war. And I just don't see a situation where the Chinese go, hey, that's great. You know what? I think I'll come back to the bargaining table. No, what's going to happen is they're going to retaliate and there's going to be something the other way. And I think that markets are just like sleeping at the wheel when it comes to this. I actually think this is one of the most negative developments we've had in a long time. I'm very concerned about this, and you know me, I am not one of these perma bears. For me to get bearish is actually a big deal. So I was already bearish going into this week. I'm only getting more bearish.
This just keeps fueling you. You're getting really passionate about this now.
Yeah.
I should take the other side. I have to start saying something bullish to create balance. Otherwise, we're going to lose all our bull listeners.
Well, the force will be out of kilter. I feel a disturbance in the force.
All right. Well,
what do you think? What do you think? Do you think I'm overreacting?
Well, you know what? Yes.
Okay.
Yes. But with that said, that doesn't make me believe. Like, I'm still bearish. Because I believe that the business cycle is very mature, and at some point the stock market starts discounting it way before a recession is officially here, and maybe we pop a little bit to a higher high on the S&P to kind of wash out traders that so don't make it easy, but I still think that there's the asymmetry is that there's going to be a much bigger downside risk than there is an upside potential. That makes me kind of design my portfolio that way. I want to play obviously some of that volatility that can really ensue in here, but I just don't know what. Well, maybe listen. Let's see how over the weekend all the different people pine in, and we'll see what influence it has on the market early in the week.
Patrick, that was a great technician's answer. If it goes higher, I'm going to buy it. If it goes lower, I'll sell it.
That's not what I said.
I know, but you waffled. You waffled. You waffled, buddy.
I just tried to take the other side. I don't know.
I know,
Fine.
but just say it's going higher, but you can't. It's like you have something.
I can't.
There's something in your body. Like you're just like you tried to say, yeah, I think you're wrong. It's going higher, and you were like, you almost started it, and then you're like, no, I can't say that.
No,
yeah. So.